We're going to try a little bit of a long here, okay? So we can see now the market's actually come offered. We sold 1,252 and we sold another 1,551. So buyer absorbed those prices, okay? And since the selling stopped now, the buyer's gone back bid. So we see he went back bid. He bought 451. He then bought another 652. So it looks as though the offer's being pulled here. So what we're going to do now is we're actually going to get stuck in here. We're going to do a little bit of a scalp. We know obviously 50 shouldn't trade, so we're going to stop out of 49. Try and see if this buyer, is willing to hold these higher prices. If the offer starts to pull, there's a high likelihood we could go back and test in and around those 58, 59. So let's watch this now. Let's see what happens. And again, a lot of people say to me, obviously, when the market's moving a bit slow, when the probability of success is a little bit lower, how do you manage that risk? Well, it's very simple. Note 1, I've got to stop in, and note 2, I would normally not typically clip a 5 lot. Normally in the Eurostoxx, I'd start with a 10. Okay, that's where I like to start. Again, if something's high probability, then you scale it up as much as you can. But in these conditions, I'm managing my risk. I'm managing my expectation. If I can make 400 euros, well, it's 400 euros. It pays some fees. It gets me green. Okay, it gives me some gambling money for something a little bit later on, where I can hopefully leverage up. Okay, back into it then. Johnny, I hope we're on the ladders. Yeah, sorry, I should have brought you back down. So, as we can see, on the 52s, yeah, buyer is now buying a little bit more. So it's just a question of now whether or not that selling is done. That little bit of selling was a one-off. Note, obviously, stop is in 49. Let's just watch this and see how it plays out now. Okay, so 2's left. Right, what we haven't seen now, what's interesting is, I know I'm bringing Johnny back and forward onto the charts, but if you come back onto the chart one last time, okay, what we can see now, that little bit of reluctance to sell below the 2s, we're now back above it. The importance now is we want to see that buyer become more intentional. Right? Now that intention will be confirmed if and only if and when, or if, those 53s get lifted. Okay, so let's watch what happens when the 3s lift. What you should see, in theory, is 3s get lifted and instantly buyer goes to 4. Okay, why? Because anyone that's now short the market needs to cover. Anyone that's been waiting to get long needs to become more intentional. Any algorithm that's waiting for, a break of a previous, lower low, lower high type pattern needs to get bid up. Okay, so let's watch this. Let's see. So note the offer gets pulled at 3. Right? We had 1,300 there. Offer's been pulled. Okay, let's see what happens when 3s trade. What we ideally want to see, to confirm that the market is, good price action, good response going on, is we want to see 3 lift, 4 bid. We don't want to see 3 lift, 3 offered. Okay, because that's telling us again, too much two-way trade. Two-way trade does not mean opportunity. Two-way trade means lots of computer programs, lots of boring two-way trade, and a lack of opportunity. Okay. So hopefully the market will be kind to us, the trading gods will hear us and just give us something for the next 7 minutes of the stream. So again, note the pull. 53s has disappeared now, guys. Completely gone and straight up 54 bid. Now what you want to see is you want to see the buyer lift a little bit higher, reload on the 3s and start to lift the 4s. Okay, so seller hits the 3 and what happens? This is now the interaction you want to watch. You want to be constantly watching and interpreting. What are the buyers and sellers doing with one another? Okay, we can see the sellers had the chance. They had the chance to take prices lower. They failed. What happens? Are these buyers aggressive? Are they passive? Okay, so right now we can see if we do go back to that chart. Okay, so let's stay on the ladder. Yeah, we're getting some action here. Okay, so again, note the reload now. Suddenly, reload on the 3s, reload on the 3s, bid up 4. Okay, but again, not aggressive, guys. There's 112 bid there. Probably of that, 100 lots is real. Okay, so be very, very, make sure when you start out with the price ladder, when you're learning the strategies for the price ladder, when you're going through the price ladder course, just make sure that, paramount, the most important thing is not the numbers on the left and right. The numbers on the left and right don't mean a great deal. Okay, what means a great deal is that 305 contracts that just traded. That means a great deal. Why? Because we have not seen anything more than a 200 lot trade in the last 15 minutes. So the fact that someone's just bought 305 at the market, at 4s, at a level, or at a reference point we've noted, that's significant. Okay. Real volume is what counts. You know, real interaction is what counts. Bids and offers, yes, sometimes they give clues. Yes, sometimes you can lean on the bids and offers for various types of strategies, which you can learn about in the price ladder course. But more often than not, the single most important thing that I pay attention to is one, the transacted volume, and then two, the time in sales.